Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me as always is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, you will get a chance to connect with us live on a WhatsApp number that will be flashing on the top of the screen. But before that, let's have a quick look what the markets are up to. So Cheryl, quite a volatile day indeed. It's the monthly options expiry, but for now we are in the red.
Absolutely. A very good morning to you, Shrishti. I'm really tempted to say that the markets are matching the shade that you're wearing.
I was hoping
but they were also down and out yesterday also, the day when you were wearing the shade of green.
Yeah.
But if you look at the markets right now, yes, we are under pressure. And not to forget, it's the monthly expiry as well. That also could be weighing heavy on the bourses. Even yesterday also, you saw a sharp gash down, especially when you talk about the broader markets, the small cap and the mid cap index. Talking about the list of gainers, then you have a couple of gainers today. You have Maruti Suzuki, they're seeing an uptick of about 1.2%. You have Reliance Industries is holding on to gains about 1%. M&M, Tata Consumer, Hero MotoCorp are the other set of gainers. While on the flip side, you have Bajaj Auto that is under pressure once again in today's trading session. Is down about 2.5%. Apollo Hospitals, LTI Mindtree, Power Grid, BPCL are the other set of losers. Advanced decline ratio nevertheless is skewed and is tilted in the favor of the declines as of now. So you have 1,765 stocks that are declining as compared to 504 stocks that are gaining on the NSE. Let's talk about the sectoral indices then. And which are the sectors that are holding on to gains? Oh, it's surprising to see actually none of the sectors are in the positive territory as of now. You have media index that's seeing a down to about 2.7%. You have realty, healthcare that's under pressure. You have small cap index that is once again under heavy pressure. 1.4% downtick now coming in for small cap index. I believe the broader markets is at the day's lowest point. There you go, Shrishti. Yes, so it's pretty weak. Market breadth also coming in. A lot of stocks under pressure in trade today once again.
Talking about the broader market space, Cheryl, just yesterday we did see that SEBI has come out with the advisory that
rather it's AMFI that has come out with the advisory, because SEBI had informed AMFI, and then therefore AMFI has now gone ahead and come out with that circular.
Well, yes, and saying that the kind of inflow that we are getting in the broader market space, especially from the large cap and the small cap, there needs to be a little caution. Not just caution, the investors need to be well informed that how the procedure is going to be in the times ahead, if at all there could be any redemptions done by them, and what is the risk associated with these investments. The investors need to be informed very well in that manner. On this note, we spoke with Feroz Aziz, Deputy CEO at Anand Rathi Wealth Limited, where he talks about the likely impact of SEBI's recent directions to the mutual funds, and he also touches upon the performance of the broader markets. Let's go across and listen into him.
NSE released its reject of all its indices. There you see that they've changed, of course, an initial reaction, I may be wrong, but they've moved from market cap mechanism to free float mechanism. So point one is SEBI is not doing one thing in isolation. They've also written to exchanges, I would guess, because if there is a certain method of indices creation has withstood the test of time, and then suddenly move from total market cap to free float market cap. That's a great move in conjunction with SEBI's letter to asset management companies through AMFI. That's point one. Point two, now they've made 34 changes instead of their limit of 25 changes yesterday night. So there has been a lot of rally because there's liquidity chasing a fewer stocks with lower free float. So I think that's how I would see it. But the letter of AMFI to asset management companies reads the second point seems a little more worrying for me, which says that people should not have a first mover advantage for an exit. I don't know how AMCs would react to that, but I think if an individual investor has bought a scheme with a fair understanding of how easy he can get out, if you restrict that person's exit, which is changing the rule midway in the game, might have a larger collateral damage in terms of sentiment.
And are you consciously looking at advising your clients that, look, the risk-reward ratio is not there in small and mid-cap stocks?
See, I think small cap as a word has not changed over the years, but the definitions, English may have not changed, but mathematically they've changed. So to answer your pointed question, we had gone long on small cap from 5-7% as implied exposure in our model portfolio to almost about 27%. We are wanting to book profits anywhere in the next 1-2 months from 1 or 2 schemes of small cap, because that's generated about 55-60% absolute return and about 30% alpha over Nifty for this year. So we may reduce in the month of March 0.1, but not from a huge fear perspective. But I think it's always good practice. If you go right too soon, with God's grace, you should take some money off the table. That could be the sentiment. But having said which, I think small cap index has gone through some changes. The largest weight of small cap index moved to mid cap, which is Suzlon Energy. So if you look at the index of 250 stocks and look at its earnings, the earning estimate for the 250 stocks weighted average, according to us, is 670 rupees. The price is about 14,800 odd. So we are looking at an index level only 22p, and Nifty is at 21p. So I think the devil again lies in the detail. There are stocks with 10p in the index. There are stocks with 100, 150p in the index. So I think that the name of the game is going to be far more detailed, and every fund manager has the provision to have 34%, 35% outside the small cap universe, which is defined differently than the index. So there is going to be an evolution. I think that's the process of a market becoming more mature.
So that's the view coming in from Firoz Aziz. Remember that the AMFI has actually asked mutual funds to go ahead and put in place safeguards. This in order to protect the interest of the investors in the small cap and the mid cap fund. And while AMFI gave out this notification, they've cited the SEBI's directive to the fund houses in a letter that was dated February 27. So we spoke, apart from Firoz Aziz, we also tried to get a view from Dhirendra Kumar, who is the CEO at Value Research, to talk exactly about what this meant for all the investors that are invested in the small and mid cap funds. Listen in to his views as well.
But most investors, who are doing their SIP can just carry on with their plans, because, when you look at the 23% annualized return over the last 10 years, if you look at all the happy investors who are doing their SIP in small cap fund, the phenomenal growth that they have witnessed, the small cap universe, which mutual fund used to invest 5 years back, was about close to 300 companies. Now that has grown to 500 and nearly 600 companies. So 300 to 600. So and the growth of this market is entirely a function of sustained money flowing into it. Many of these companies in which mutual funds are attracted, they have invested heavily, the prices have gone up. The promoters still have 70-60%, they are the biggest shareholder. And this is the segment of the market where we don't have the diversity. This is the segment of the market where, in small caps, NPS money does not flow in. In this small cap, the EPF money does not flow in. Even FII money doesn't flow in. This segment of the market is entirely individual punters and mutual funds. And for individual punters, the universe is large, nearly 3,000 companies. But for mutual fund, it is 580 companies or so.
All right, so that's a view coming in from two of our experts, what they make of this AMFI directive coming in yesterday post-market hours. But let's bring on board our guest for today to understand what should you do if you are looking to allocate your money into the broader markets as a whole. We have Kush Bora, who's joining us on the technicals, while on the fundamentals, we have Vivek Karwa joining us on the show. A very good morning to you, Kush, as well as Vivek. Thank you so much for joining us on ET Now. And Vivek, coming to you, yesterday actually I was at the Aditya Birla Sun Life AMC's Voyage, the 10th edition of Voyage, and there we did speak to a lot of mutual fund distributors as well, where they have been advising slowly and steadily to their clients to move away from the small cap funds and in fact park their money maybe in a hybrid fund or a balanced fund, or for the matter of fact, the best of all option, look at large caps. What's your view coming in? Do you see some sort of a froth building in the broader markets as a whole? Or do you think that, yes, this move coming in from AMFI is good, it's great for a precaution for all the investors, isn't it?
2-3 things, Shirley, over here. First of all, good morning to you and Kush and others. Whatever steps taken in investors' interest should be welcome. So if it is SEBI or AMFI, if they are looking at something and doing it better for the investors, it is always a welcome move, because if you don't take steps early, then there can be disasters as well. So the faith in mutual funds of the investors is very, very high. And since we do a lot of mutual fund business, in fact, my mutual fund business should be bigger than my equity portfolio. So that's the size we also do. So what we have been doing is, and this I've been very vocal on your shows also, that small caps and mid caps are definitely overpriced right now. If you look at small caps, if you look at long-term averages, you'll find that small caps are almost like 35, 38% at premium to the long-term averages. And the mid caps are around 25% premium, while the large caps are around 10% at discount. So this is the math as of today. And what is happening is the SIP book size of around 18,000, and which is growing month on month and will continue growing. Almost 50% is only in small cap funds. So this is the thing, and hence some safeguards is always welcome, first thing. And then what is going to happen is small caps, the kind of volatility what we are seeing now, maybe small caps won't give you, the index won't give you big returns over next say 1.5 years, 2 years. So the moment the returns come down and shows you say little friendly results, I should say, returns, the investors will start moving towards SIPs with large cap and mid caps as well. So that is also going to happen over a period of time. So last 6 months, we have also withdrawn a lot of money from small caps and shifted them to either large cap or mid caps. But yes, that's the process, and that's the role of advisor, wherein you also try to safeguard the investors' money wherever it is costly, take out from there and reinvest wherever things are looking cheap and sober. So that's about it. So any investors' interest related moves are always welcome.
Okay, investor-related moves always welcome, and that's the large cap space that that is something that is attracting the distributors as of now. But Kush, coming to you, let's talk on technicals then, because just yesterday, what a knock all these mid and the small cap indices have witnessed. But as of now, how are they placed on the technical front, and any sector that you wish to highlight that you believe that it's at good levels to maybe book out profits or worth having a look at?
Hi, Srishti. First of all,
Hi,
very good morning to you, Vivek, Cheryl, and all the viewers. Well, let me put this technically. There is something called divergences, right? I don't remember when was the last time that I saw three peaks, divergent. What do I mean by that? That the mid cap index kept hitting, a new high, but the RSI and a couple of other momentum indicators, weren't really catching up. In fact, were lower than their previous highs. That itself was a very clear indication that the strength is lacking. Some of these names could come in for a big profit booking, but on the whole, the mid cap and the small cap stock could go into a bit of a consolidation, and hence it's just coincidental that this directive has come about yesterday. But for the last 2 weeks or so, we've also been advocating the same thing, that at least book out profit. Of course, there will be some names that there will be in the market which will keep giving good returns. So not the entire pack is going to fall, but as a whole, the strategy of investing in mid caps and small caps is perhaps something that warrants a bit of a relook. So that's sort of something that's playing out in the market. Now, the other thing that's happened is a lot of investors are not really used to uh, follow-up cuts, right? I mean, at best, we've seen a one-day cut, 4 or 5%, even if it is harsh, and then the markets rebound. Perhaps this time around, investors are in for a slightly longer pause and a longer consolidation in the mid cap and the small cap names, and I think that is going to hurt a little more. Now, as you said, as you asked, what are the couple of pockets that we think have probably done quite a bit, or also perhaps look attractive? So to answer the first one, I think the PSU basket and the railway names have already seen a bit of a correction. While, as I said, some of these names will continue to do well going forward, but I think investors need to be wary the next time around these stocks start to rally. Of course, there will be upside, but in the railway and the PSU names, especially the PSU banking names, we'll be a little wary. What are the pockets that still look good to us from the infrastructure space, specifically the cap goods space? Here, the mid cap names and the small cap names could continue to outperform. So these are the sectors that we're looking at in terms of curbing some of our holdings. and some of the sectors where we are looking at adding some more on dips.
All right, so that's the view coming in from both of our experts, and we've tried to cover as many corners we could in order to get you a better understanding of what that directive coming in from AMFI meant. But on that note, we'll actually slip into a break on this edition of Buy Now Sell Now. When we come back, we'll start taking your query, viewers, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET9, and what a volatile move on your screen, as you can see in the last 15 minutes. So ever since we started the show, the stock, the Nifty index has seen a spectacular recovery, almost 110 points recovery from the day's lowest point when it comes to the Nifty. Let's pull up the charts for Nifty Bank and let's see what Nifty Bank is doing. What are the broader markets doing? Is this recovery also seen in those segments as well? Yes, Nifty Bank trying to make a comeback, just like the way how the benchmark indices are 0.5% uptick coming in from the day's lowest point for Nifty Bank. The broader markets also are quite sharply off the day's lowest point. So yes, some recovery coming in, but let's wait and see, and let's see if this is sustainable or no going ahead. But with that, let's talk about all of his stock related queries then, viewers. We have our experts Kush Bora as well as Vivek Karwa, who will be addressing or answering all of the stock related queries. You just need to write to us on the WhatsApp number with your name, the stock that you're looking to invest in, mention that name, and if you purchase the stock, mention the buy price, the quantity and the time horizon. Let me just start with the query then, and the first one is coming in from Suresh Babu, and he wants to know about Bharat Highway INVIT. It is an IPO. He wants to know whether it's, he wants to basically understand the entire underlying theme of INVIT, and if it makes sense to look at such counters for the future run. What's your take coming in on this, Vivek? He basically wants to understand, does it make sense to invest in an INVIT, and what purpose would it serve fundamentally?
See, first of all, many people misconstrue INVIT as an equity. INVIT is not an equity, and the tax benefits also which you get in equity taxation when you invest in mutual fund or direct stocks of the 10% and 15% percentage long-term, short-term, even that is not applicable to INVITs. So INVIT is supposed to be earning you some percentage like a FD, and that should be very, very clear because it is listed on the market. Sometimes what happens is people chase the listed instrument as equity, and then the prices move up and down. So I would not take interest here. If I'm ready to take risk, I would always take risk in the equity market directly, and because I also end up earning more over there. So from my side, it would be a totally avoid, be it INVIT or be it REITs. Both I put in same category.
Okay, that's the view coming in on INVIT, but on the stock specific action, let's move on. And the first query that I have is coming in on Dr. Reddys. This query is from Neelam. And Kush, what will be your advice for her? She is holding the stock from a price of 5,660 rupees. She wants a near-term view, maybe for the next 3 to 4 months.
So from a near-term perspective, Srishti, I think the stock is due a round of profit booking. We are seeing, as I just mentioned a while back about the negative RSI divergence. So on the weekly setup, there is a very clear negative RSI divergence. The recent uptick has also been on thinning volumes. So the stock could come in for a bit of a profit booking. So 60 to 50, 60 to 75 is a good zone. Since she is in a profit, hold this one with a trailing stop loss of 60 to 75. If the stock does drop to those levels, best to exit out. If the stock does head up from here, keep moving a stop losses higher.
This one is coming for you, Vivek, from Satya. He has KCP Limited, which he purchased at the levels of 148 rupees per share a few months ago for a minimum 1 to 3 year investment. He's saying that the stock has seen a sharp up move, then it saw sort of a correction or so. So what's the strategy? Given the fact that now he is looking to hold it for the long term, not to get perturbed with the short term moves when it comes to KCP Limited, and what sort of an strategy should he use for the long term?
Shril, on your sister channel, Swadesh, I had recommended this stock as a VIP stock at around 130, 140. And in fact, sold it at around 215, 220. So as of now, we don't hold, but yes, even I had interest in this stock. Longer term, so short term story is over. But longer term, if you look at the stock, I think if you get it again at 170 and below, you should be a buyer in it. And if you're looking at, say, time horizon of 3 years plus, I think even this price won't give you losses. It is going to give you a good amount of money. The next target after this, that retracement has already happened. I think the next target should be around 250, 260. It has many businesses. It has sugar. It has plants in Vietnam. It has cement business and a couple of other businesses. Doesn't come to my mind right now. But yeah, very good company. It is South-based company. AGM happens in Chennai. So I have attended it many times. And I think 250, 260 should be the next target if you hold it for 3 years.
All right, moving on to the next one. And Vivek, once again coming to you because this query is on UTI AMC as well as ABSL AMC. Saurabh wants to know at this point in time, can he go ahead and make a fresh investment in any of these names?
See, again, if you look at long term and what is going to happen is the AMC business is going to do well. In fact, ABSL AMC after IPO, it has still not crossed the IPO price. So the stock has been underperforming. So the stock is trying to move up. But what I feel is the entire AMC space as such should do very, very well over next 10, 15 years. First reason, the retail participation in equity markets is increasing. And hence, you will find that the SIP book size and the lump sum book size will continue moving up. So all the AMCs will continue doing great business, and the revenue model of the say fund manager or the AMC is just a percentage on the assets under management. So as the assets keep growing up, their revenue will keep doing good. So long term, I'm very, very bullish on all the AMCs. So in particular, if you really want to buy, I think ABSL should be the first bet, and second should be UTI. And if you in fact factor in the NPS business which UTI does, you'll find it is one of the largest AMCs.
All right, I have a query coming from Shiva Reddy, who's writing to us from Guntur, from Andhra Pradesh, and he has HDFC Bank 760 shares. Though he's mentioned the average price of 16,100, I would believe it is 1610. I would like to believe 1610. Kush, I know you're nodding your head, yes. He wants to know whether he can average right now. His time horizon is 1 year. So I believe 1,610 rupees would be his buy price, maybe that if that it is. Because I've not seen that rate on HDFC Bank for a while now. So for me, I'm also trying to figure, is this the buy price or no? But nevertheless, if he has HDFC Bank at whatever price, do you think right now should he look to average it or no?
Cheryl, I was just imagining how many people will be happy if HDFC Bank is 16,100 as of now.
When I asked this question to Shrishti, even she was like, "Arey, now Bank Nifty would have been 1 lakh, isn't it?" So yes, I am sure.
Then I'm guessing it must be 16,100. But we've had a couple more discussions on HDFC Bank, Cheryl, and my view remains intact. From the current juncture, the risk-reward ratio in HDFC Bank is extremely attractive. If he's got positions at 16,000, 1600, 1610, then it's not a bad idea to average at these levels. On the downside, 1300, 1350 is a strong support zone. I think this is a good entry point to bring his price a little lower. Anyway, by the year end, our target on HDFC Bank is 1600 plus. So if he does average out at these levels by the year end, he possibly might be in some profit as well.
Okay, moving on. And Vivek, any advice on Zen Technologies? Bishakha is holding 100 shares from a price of 201 rupees.
See, again, very, very small cap company and into training solutions. I don't like that space, whatever is happening on the Baiju side. And so I would give an avoid on this. Please avoid it. The valuation also looks very, very costly. The stock has run up a lot in recent past. I think that's about it. So please exit.
Let's move on then. Let's take the next query. And this one is coming in from a viewer who's actually messaged me his entire portfolio. Looks like it, almost 12 to 13 stocks. But I will take maybe two out of those. One is Stovecraft. He has 100 shares of Stovecraft at the price of around 500 rupees per share, and the other one being Devyani International, about 1,000 odd stocks at a price of 190 rupees per share. Wants to know whether stay put with these counters or look to exit. What's your take, Kush?
So both of these stocks have actually, seen better days. But from a purely technical standpoint, right now, Stovecraft seems to be making, a comeback, and there's a very good possibility that in the coming quarters it could perhaps hit 525 and then 570 kind of levels again. So Stovecraft, my suggestion would be to stay put. Devyani, not so much. The stock been under pressure. Every rise has been a selling opportunity. Barely holding on to the 150 support zone. If that is taken out, then I think it could slide further from here. So I think Devyani is an exit. Stovecraft, he can hold on for a couple more months.
Moving on to the next one, another viewer, Cheryl, has literally gave us a long list of stocks, so it actually gets quite tough to take so many stocks at once. But Vivek, this query is coming from Vincent, and she has highlighted some large cap names, and she wants you to select which amongst them she can go ahead and make a fresh investment or increase her exposure. Info says HDFC Bank, L&T, Siemens and Tata Consumers. Any advice to go ahead and make a fresh investment or increase the exposure in any of the names?
I think my first choice would be HDFC Bank. And whatever happens to market, the downside looks so minimal over here. And yeah, by minimal downside, I don't mean that the stock is going to recover very, very fast, but it will be a slow and gradual recovery. So HDFC Bank looks very good. And as a disclosure, even today we have placed some buy orders around 1400. So that is one thing. Secondly, my second bet in this would be Tata Consumer. So these two stocks should, I think you should surely hold them.
So on that note, we'll actually slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking all of the stock-related query viewers, so don't go anywhere.
Welcome back to Buy Now Sell Now show, where we get you answers for all your stock related queries. And moving on to the next one, Vivek, the next query that I have is one of the pharma majors, one of the key underperformers, that is Laurus Labs. Prakash from Bangalore is holding the stock from a price of 505 rupees. Can he hold this for the long term? Do you trust that this could give him some recovery in the times ahead?
See, overall fundamentals of the company is good, but even at these prices, the valuation looks so stretched that I would actually be uncomfortable asking to hold. So I would ask him to only book profits. Now, overall, when it comes to pharma, I am quite bullish on pharma sector as a whole, and I feel even if market comes down for some reason, pharma should be the most defensive bet as of today because it has already underperformed. But Laurus went up very, very fast, and the investors are still paying penalty for it. So I think this would be the case going forward as well. So avoid this and maybe invest in some other pharma company.
This next one is coming in from Sagar. This is for you, Kush, and he has shorts on HUL and HDFC Bank. For HUL, the short position is from the levels of 2,640. While for HDFC Bank, it is from 1,690 rupees per share levels. These were his New Year's short picks, it seems. So he's booked partial profits and HDFC at 1,400 and HUL is 2,400. He wants to know, are you seeing further downside in both of them, HUL as well as HDFC Bank, or is there any other better suited shorting ideas right now?
One, congratulations to him on such a brave trade. In hindsight, they seemed pretty obvious, but at the time they would have seemed, brave. Both these stocks are actually, very clearly in downtrends. But as I said, the risk-reward ratio for fresh shorting from here isn't really all that great. So, HDFC we just discussed. HUL, for instance, has a strong support zone at 2380, 2370 kind of levels. So if he wants to hold on to these shorts with a trailing stop loss, that's fine because he shorted them at higher levels. But I wouldn't suggest fresh short. Now, what are the counters where he could initiate fresh short? Well, a couple of names that have been consistent underperformers. So Biocon, comes to mind. This stock has recently seen a double top kind of a formation and sort of taking down from there. So Biocon is one stock that he can consider going short on. 250, 255 are the targets that he can look for, and on the upside, 280 is a strong, a stop loss, and tight stop loss that he should hold on. In fact, some of the OMCs are also starting to see pressure, without any kind of recovery. So that's also something that he should keep on his radar. Although I wouldn't suggest a short immediately, but IOC, HPCL is something that I would have on my radar. If they sort of slide further from here, I would still dare to go short. Even at slightly lower levels. But Biocon from here is one stock that he can consider going short on fresh.
Right, moving on. And Vivek, what will be your advice coming in on Bata? Nitya is a long-term investor holding the stock from a price of 1490 rupees. What to do in this one? She's sitting at a loss in this counter, and she also wants an advice on IRDA as well as IRFC. Good levels to enter any of these names?
See, IRDA, IRFC, these are those category stocks which I have been very, very careful when they were up, and in fact, significant correction has happened. Even now, I feel at least until you get election results, you should not be a big player in railway stocks as such. So please avoid them to buy afresh. See, when it comes to footwear, the companies were struggling with input costs. The companies were also struggling because the market still largely remains unorganized. But at these levels, I think Bata, if you're looking for long term, there should be more shift from unorganized players to organized, and that trend is already happening last many years, and it will continue to happen. So what I feel is Bata should be a good buy over here, but at least keeping say 2-3 years in mind. So if you do that, I think technically it is looking very bad. Kush will agree with me, but fundamentally, I think long term it should do well from here. So gradually keep buying as it comes down.
This next one is coming from Neha. She has Sona Comstar at the levels of 576 rupees per share, Kush, and Shriram Finance as well at about 1960 rupees per share. She's making 20% profit in both of them. She wants to know whether it makes sense to stay put for the next 3 to 6 months in both of them, and what sort of a target should she look at?
Well, not a bad idea, both of them. Sona Comstar perhaps has seen a breakout in the last couple of sessions after a long bit of consolidation. So I think on the upside, 740, and once that is taken on 775 are the levels positionally that the stock could retest. And from a support zone or a stop loss perspective, 650, 660 are good zones to hold as a stop loss or as a trailing stop loss. Shriram Finance, the news is out. The stock's actually sort of now gone into a bit of a consolidation mode. But I think once this phase passes by, the stock will resume its uptrend. Again, on the upside, the stock could touch 4450 and then 2450 and 2600 kind of levels. So both of them are good buys. Shriram Finance slightly more stable and steady compared to Sonacom. But given the setup, both of them are steady. She could continue holding both of them.
On then, and Kush, the next query is coming from Anand, and he wants your inputs on Delta Corp. He's holding 1500 shares and his average buy price is 160 rupees. Can he go ahead and average more at this point in time? What will be your advice?
So my suggestion would be don't average more. The stock has been in a broad band of let's say 130 to about 160, 155, 160 kind of a range. There isn't any fresh trigger on this, but it's not even broken down below its support zone of 130. So my suggestion would be hold on to this. Don't look to average more because there are some other better avenues to invest your fresh money into. Why put some good money behind bad money, as they say. So hold on to this one. My stop loss here would be 130. Once the consolidation phase is over, some fresh triggers coming in, the stock could move higher towards 155, 160 kind of zones again. But my suggestion would be to book profits or at least exit at cost in Delta Corp.
Right, on that note, we slip into a break on this edition of Buy Now Sell Now. But a quick note for all of our viewers, and as Buy Now Sell Now celebrates Women's Day this Tuesday, that's March 5th. Yes, I know Women's Day is on March 8th, but we will be celebrating Buy Now Sell Now Women's Special on March 5th. So we also want to thank all of our viewers and all our women investors who've been actually writing to us for both their queries as well as for their appreciation. And we will be having a special segment for the women's investors on March 5th. And if you want to be a part of this initiative, just send us your photograph, full name and location by the end of the day today on the number that's flashing on the top of your screen. And also happy Women's Day to all of them in advance. So do write to us. But on that note, now we slip into a break. When we come back, we'll continue taking more of your queries on the other side. All right, with that, we welcome back. You're watching Buy Now Sell Now. With that, let's kickstart with the rapid fire then. And the first one is coming in from our viewer. This is coming from Venu Gopal, who's writing to us from Hyderabad. Happiest Minds, 100 shares at a price of 1400 rupees per share. What should he do, Kush?
So Happiest Mind is a bit of a downtrend. I think hold with a stop loss of 810.
Okay, Vivek, Ramamurthy is having 35% profit in Godrej Properties. Good time to book out or continue to stay invested?
Long term, please hold.
All right, Sunita from Bangalore has New India Assurance at the price of around 300 rupees per share, about 100 shares. Should hold or exit this particular counter, Kush?
No, she could continue to hold. The stop loss here would be 230.
All right, Kush, what will be your advice on Aavas Finances? Dr. Ravi has bought these shares just 1 year back. What will be your advice in this one?
The stock's now attempting a rebound, so could be in for better days. Hold for targets of about 1600 and higher, and here a stop loss would be close to about 1400.
Okay, Vivek, Swati has 3 PSU banks: PNB at 90, UCO Bank at 45, and Bank of Maharashtra at 47. Stay put with all of them, or what should be her strategy? Making good profits.
UCO, you converted it to PNP and hold PNP and Bank of Maharashtra.
Okay, Vivek, what will you advise on Bosch? Mr. Singh has 100 shares from a price of 16,500 rupees. Can he go ahead and make 50% of that investment now in Honeywell Automation?
Honeywell Automation also is a good company. In fact, he can do it, not an issue.
All right, Kush, Canara Bank 500. Can Shiva look to enter right now? About 400 shares looking to buy for a period of 1 to 2 months.
Oh, absolutely. He can buy. Stocks come off in the highs. I think the stop loss here would be 540. Targets from a near-term perspective, 565 and 590. Just as a quick disclosure, we've shared this stock as a recommendation to our clients as well.
All right, Kush, lastly, your advice on CESC. Gautam is holding 5,000 shares from a price of 103 rupees. Good time to move out?
Perhaps, but I think this is a late entrant to the power names. So I think hold, because he's in a good profit. Hold with a stop loss of 120 thereabouts. He could see slightly higher levels of about 135 and more.
All right, with that, we come to the end of the rapid fire as well as the queries. Thank you so much, Kush, as well as Vivek, for joining us on the show, patiently answering the queries, also answering any doubts that may have arisen in our investors' minds with regards to the broader markets. Thank you so much for joining us on the show. But viewers, let's talk about what's happening in the arena of news. And Tata Group is betting big on the future, as Tata Sons chairman and Chandrasekaran has said that the group will soon be announcing a semiconductor chip unit. He also added that this is going to be a massive investment for the company. The unit is likely to be set up in Dholera, which is in the state of Gujarat. He said that India, with its size, demography, as well as other advantages, will be very significantly well placed to take advantage of this move.
All right, moving on then, and the cabinet today will reconsider 3 of the 5 semiconductors proposal, which, if approved, to lead to an investment of over $10 billion. Sameer Dikshit is joining us with what are the sources saying. Hi Sameer, very good morning. Tell us more on this story.
Good morning. So this is a big development related to the semiconductor segment. Government is looking to establish India as one of the semiconductor hub globally. And in the same direction, government is currently having 5 proposals actively. And sources have informed that cabinet is likely to consider 3 of these proposals, which include the players like the Israel-based Indus Semicon, even Tata is also a big player in this segment, and they have already shown keen interest to establish a semiconductor manufacturing plant. In addition to this, HCL Foxconn joint venture is also a proposal under consideration. So these 3 players consideration is there by the government, and it is likely that it will be taken up by the cabinet today. And if approved, if given a green flag by the government, this will entail an investment of over $10 billion. Moreover, this will help to boost employment as well. Government also understand that when they are inching closer to the general election, these sort of big ticket projects announcement or the decision will help to give that sort of confidence that government is actively looking to build up the infrastructure in various sectors, and also paving way for employment generation. So this is one of our big projects that government is currently considering, and in the semiconductor segment, these 3 proposals might be taken up by the cabinet today and might be approved as well.
Thank you so much for that, Samir, for joining us on the show and actually taking what's exactly on the agenda of the cabinet meeting. And yes, this will be a significant move coming in for the semiconductor industry. But on that note, viewers, we are actually totally out of time on this edition of Buy Now Sell Now. It's a goodbye from myself, from Srishti, myself, and the team that put the show together. Thank you so much for watching. Markets at Noon coming up next.